Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 27th of February, 2019, your last Wednesday of the month. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off is dominating. Uh, we have an allocation to safety somewhat, except for crude. Crude is up 2.23%, $1.23, driven by the fact that inventories came up short yesterday on API, and also it looks like OPEC, for the first time in a long time, is sticking to its cuts, the supply cuts that they've set out to do. So it's helping crude push higher despite multiple uh, warnings and tweets and so on from President Trump that crude needs to be cheaper. In any case, the volatility index is back up over 15, close to 16 currently, and the DAX is off 0.5%. It's the laggard, followed by the Euro stocks. The bonds are off, which is kind of odd. They're off currently 14 ticks on the March contract. The Nasdaq's down 20 points. The Dow Jones is down 59, and so on and so forth. So the only thing that's up is really crude, the VIX, the cable, and the dollar. We would expect to see gold up somewhat. Gold is down about 70 cents currently on the April contract. So a little bit odd there, but the overall sentiment is risk off. Um, One of the events that's being attributed to on this drop is that Pakistan and India had shot down each other's aircraft, fighter jets. So there's a big move by global leaders to help temper that. Remember, these two are nuclear power, and they have not. India has not. They've not stricken each other since 1971. 1971. It's a long time ago. It's like the beginning of Earth. Anyway, get it? Future Strader 71. Um, in any case, that's how things are shaping up today. There was a lot on the calendar. Overnight, we got the business. We got several um, European releases. Business confidence in the eurozone came in slightly higher, 0.69. We got the inflation rate from Canada, came in a little bit lower, 1.4 versus 1.5. And we got wholesale inventories, which came in higher than previous, showing higher inventories. U.S. goods trades balance came in worse at negative 79.49 billion versus negative 70 prior. We do get Fed Chair Powell at 10 Eastern this morning again. I believe he's in front of the House committee. I believe he's in front of the Senate yesterday. I don't remember. We also get pending home sales factory orders at that same time. We do have crude oil inventories at 10:30, and that pretty much tops up the day until we get numbers later from China, the MBS manufacturing PMI for February, expecting 49.5. So that's what's on deck for today. Looking for some turbulence around 10 o'clock Eastern, just a half hour after the open. Cool, cool. Um, The other thing that's actually out there is this testimony by Michael Cohen, who is President Trump's former lawyer and someone who's sentenced to 3 years in jail for lying to Congress and misleading investigators and so on. Apparently, he has some pretty important information relating to the president. That may cause some turbulence in the market as well. We don't know. We'll see what happens there. Remember, the market does not like uncertainty. And it does not like, abhors uncertainty. If it cannot define it, it's okay to have uncertainty, and certainty is built into the market. It's the inherent nature of human beings is uncertainty, but if it's not something that can be quantified, the market tends to move to safety. So we'll see what happens there. Let's take a look at yesterday's expectations. Powell was in here somewhere, but the primary expectation is we're likely to push back into the range I was looking for, if you recall, 2803, 2800 and a quarter first. That's right here. And then 2805 was the 2805, 2806 I talked about as a key area for a short, for a strong short. Um, uh, and I expected a rotation down. Scenario one played out, but yesterday was a bit of a messy day. There's the responsive buying as expected. We opened out of range in an open auction at 27.9150. Now remember, 27.9150 was last Friday's close. It's the week's close. 27.9150 was the open yesterday, and 27.9150 was the exact close, the exact pit close yesterday. So we have basically a doji type stick candlestick, and so Uh, that's how it runs. Don't forget that there was an anomaly. If you look at your data, and you'll notice that there's a bunch of information missing from about, I believe, somewhere around 6:40 Central PM until 9:45 Central PM. So that's 7:40 Eastern US to about 10:45. The exchange went down. I haven't seen that happen in a long time. The exchange went down across the board. Wasn't quoting anything. You couldn't trade at all for 3 hours. Ouch. They had to really move into their backup system, matching engine, and so on. It's very, very extremely rare that that happens, but it did. So there's a period of time where it looks like your data feed did not get any data. If you keep reloading data and not getting it, it's because the exchange didn't have that data. So there was no trading at that during that time period. Usually a very quiet time period anyway, but it's just very, very strange that that happened. Hopefully we don't have such a thing in today's market, so mind your risk on that. So anyway, so here's what we got. We got again 27.9150 last week's close, yesterday's open, yesterday's close right here, and then we got responsive. This was a bit of a mess here. This was right about an hour past when Powell started speaking. We had a neutral day. We moved back up into the range as expected. The initial turn was right on top of 2800 and a quarter. That was the point of control, as you can see. I mean, the IB highs you can see there. So that was right to that low, the swing low from Monday. And then later on, it pushed to 2803 and a quarter, and then we pull back into the middle, right underneath the mid VWAP, right on top of the point of control at that point, or right below the point of control at that point, and then we start to rip back up. We get back to 2803 and a half. So we take out the high by a tick, and then we start walking down. It's a one tick failed auction at the high. And it closed bearish. If you look at the high of the session, there's somewhat of a taper, but we do have a bit of a double top one tick test. The low was very weak. The low did not show an excess, did not show that buyers really stepped in and moved price away very quickly. So that there would be no volume at the low. There's a lot of volume at the low, and the way this closed gives us a pretty decent probability of a continuation lower, which takes us further into the range of last Friday. And I expected at least a test of this 2781 and a quarter. Where did we go? 2780 and a half at pushed through it by 3 ticks. There's a stock zone there. Oh, stock zones are up. Anyway, so that doesn't matter at this point. So that's what we got yesterday. So we carry that over. So what happens then as we move into the overnight session? We carry that over into the overnight session. We continue the auctions interrupted by the close. We continue lower and we sit sideways for some time. Of course, a lot of that time there's really no trading. Um, and then we start to sell off. We're beneath the mid. We're holding beneath the mid, beneath VWAP. We are moving away from the upper distribution that was put in on the reopen, and we've built a lower distribution. The volume is relatively low compared to prior days. It's pretty much in line with what we've received recently. Um, So there's not much we can glean. The fact is we're below last week's close currently, the 91.50. We are below the century figure, okay, and we couldn't push into Monday's range and hold it. This looks like it's likely to rotate even further down, seeking out buyers. So that's my view on today. So with this rotating down, we start to then look at, okay, what happens if we extend this composite forward? So here's a composite being formed by bar, 15 minutes. There's the gap. The gap leaves us with no volume right here so far, but that day ended up pulling all the way back. So you can see we're forming that profile up top and it's starting to fill below. So there we are at the end of the day, and it looks like we filled back in, and now we're continuing to fill this area at 94, 50, 95. Uh, we spent a lot of time here yesterday and we finished at 91.50. So overall, you look at this profile and it looks like we pushed higher and we've kind of squeezed away from it, and that's why I'm expecting that we're likely to move back in here. The overnight point of control is right on top of the point of control of this entire region, the MC point of control of this entire region. I'm looking for this to explore the next key area down, which would be down here at 27.75. That's how things are shaping up in terms of what the auction is doing. So let's take a look at what we're expecting today because I'm running out of time. Aujourd'hui, today, we're looking for again an open auction out of range. Okay, so we've had an open auction out of range up here. We've had an open auction out of range here. We've had in range, but right at the high. The market seems to want to move away from wherever it was recently. Um, so it's an open auction out of range. The expectation is that we are likely to get tangled with this overnight point of control and the MC point of control. That's this black line. I expect us to get tangled here, and I'm looking for a rotation back into the prior day's range, looking for a test of this 94, 95 area. There should be a stock zone here. I need to correct this, and I'm looking for that stock zone to sell out of the range again and then test lower. That's my primary scenario for today, and the expectation, again, this is not a prediction of what the market needs to do or what I want it to do. This is just moving pieces on the board in anticipation of action and how I might react to it. This is what we're doing here. This is what I want you to take away, is that, just putting a bunch of lines on a chart is not enough. We need to look at, okay, if a scenario plays out this way, how do you respond? What is your big trade, your key trade? If it's responsive, what is your key trade on scenario 2? If it pushes up, rejects the prior range, and then starts to impulse down, consolidate, and start to move. I'm monitoring this area for both scenarios. If it's not able to continue higher into the point of control, then I'm looking to short, hopefully before the impulse. And in that case, I will be looking for the naked point of control down here at 74 or so. That would be the secondary scenario. If the market, depending on what is said, remember the president is in Vietnam and he'll be in front of the press. If we get an open that tests down and then impulses up into the range, consolidates, I'm still going to look to take the short in the 95 area, but it may push through and get us back up into this 2800 area before it settles off. So we may end up getting back into this 2800 area on an open test drive higher. So be ready for that. I'm happy to take the loss at 94.50, 95. If that doesn't hold, that's the first area I'm going to look at, and then as the key short, the key long is going to be in this 81, 80, 50 area for the long into scenario 3. Okay, so those are the primary scenarios. Hopefully you pick something up from this. I didn't create an announcement screen for this. We just need to still work on that. But March 21st, March 14th is the first anniversary of Convergent Trading. You can find information on it at convergenttrading.com. And on March 21st, we're having a trader spotlight with Ira Harris. This is almost 40 years of trading experience, a global macro trader who's going to give us insight on how bigger funds, and macro traders look at the markets. I think this is very, very interesting. It's a different view from the day-to-day, technical analysis that we do, and he's very busy in equity in currencies and the yield curve and so on. That'll be March 21st, right after the market at 4:30 Eastern. You'll see an announcement for that. We'll let you know. Have a great day. Watch your risk. Without risk, you're just a gambler. Good luck.